You were listening to ChartingWealth.com, and today we are talking about Heiken-Ashi Candlesticks. What are they all about? Well, they are different than your typical candlesticks. Your typical candlesticks simply show your open, low, close, and high. Heiken-Ashi candlesticks are different than that because they are calculated differently. What does Heiken-Ashi actually mean? It's Japanese for average pace. We find that Heiken-Ashi candlesticks are so much easier for us to actually follow what's going on because of the way they're calculated. They help you actually see trends better and easier. How are they actually calculated? Well, this is how they work. The Heiken-Ashi close is not simply where the security closed that day. The Heiken-Ashi close is the average of the open, the high, the low, and the close for the current period. So you take all of them, add them together, divide them by 4. That is what the close is on a Heiken-Ashi candlestick. Now, the open on a Heiken-Ashi candlestick is the average of the prior Heiken-Ashi candlestick open plus the close of the prior Heiken-Ashi candlestick. So you add the open and the close of the prior candlesticks and divide those by 2. That's what the open is. Now, next, the Heiken-Ashi high is the maximum of one of 3 points. The current period's high, the current period Heiken-Ashi candlestick open, or the current Heiken-Ashi candlestick close. Whichever is the highest, it is what you note down as the high. That is either the highest wick or the candlestick itself. It's the maximum of the high, the open, or the Heiken-Ashi close. Now, the Heiken-Ashi low is the minimum, again, of 3 points. It is either the current low, the current Heiken-Ashi candlestick open, or the current Heiken-Ashi candlestick close, whichever is lowest. So the lowest is the minimum of the open, the low, or the close. That's how we calculate the Heiken-Ashi candlesticks, and what it allows us to do so much better because it's actually using prior candlesticks in the calculation to allow us to literally see much, much better trends. If we go back to our first slide, you can see the way the Heiken-Ashi candlesticks are set up. If you look at the red candlesticks and these big down movements that you see on those charts, those are solid red candlesticks with wicks down below, and you actually see the down movement occurring. The green are all open boxes, and we're going to talk about why we have open boxes and what those actually mean in our third slide. The primary signals for identifying trends and opportunities with the Heiken-Ashi type candlesticks. Now, one candle with a short body and an upper and lower wick. It can be a spinning top. It could actually be a doji. Whatever it is, that's showing you that there is indecision in the marketplace and there's a possible change in trend. So when you see one of those, you need to be careful. Now again, this is not the end all to be all because we use everything together on our charts. But being able to look at that candle and depict what that pattern is so helpful to us. Number 2, filled candles indicate a downtrend, like the red candlesticks that we see in the chart depicted in slide 1. Those are solid. Now, those filled candles indicate a downtrend. What should you do there? Well, you can consider adding to a short position, that is expecting the market to continue to go down, or exit a long position. Now, when we say short, we mean down market. When we say long, we mean up market. So if you are in a regular fund, such as we'll say SPY, the Standard & Poor's 500, okay, if you start seeing filled red candlesticks, it's indicating that you're entering a downtrend. Again, that's just on that chart, just in that time period, and exclusive of any other signals that you are getting on your charts. Then, number 3, filled candles with no upper wick identify a strong downtrend. And we actually see, if we go back to the first slide, all the red candlesticks, particularly where there's huge down moves, as you look at that, you can see that there are big wicks on the bottom of those candlesticks. So that's something to pay attention to. It means lots of strong down movements going on. So remain short. If you are in an inverse fund, such as SH, which is the ProShares inverse of the S&P 500, what does that mean? It's a fund that's short. It means that it goes up when the S&P 500 is going down. That's why we call it an inverse fund. Isn't that cool? You can actually find those things in ETFs. You can find ETFs that do just about anything. And what's so neat is when the market's going down, if you're sophisticated enough to know this, you can actually get into, in fact, I've found over and over, actually trading with real money, I've made more money in down markets than I've made in up markets because I feel like it's easier to trade in a down market because markets seem to be, for me at least, easier to identify going down and when to get out, and I've always done better in down markets. Now lastly, number 4, hollow candles with no lower wicks indicate strong uptrends. Stay in your position if you are in a standard type of fund, in a fund that is a long fund that is going up. And of course, we can see that on our initial chart with the green candles where you see so much trending up. You can see hollow bodies with long wicks on the top. Again, those are signs that the market is trending upwards. Well, we love our Heiken-Ashi candlesticks. They are, for me and for the kind of charting that I'm looking for, they make it so much easier to actually see a trend. And again, Heiken-Ashi, average pace, average trend. It's helping you see where the market's going. Again, it is not the grail. It is not the end-all to be-all. We use all of our different indicators and charts together, but it is an important part, an important piece of knowing what we are doing. And we love to hear from you. If you've got questions, concerns, want to know more about Heiken-Ashi, have any particular questions, please let us know. All of our charts are set up using Heiken-Ashi type candlesticks. We like them a lot. We love to hear what your observations are and your thoughts. If you find a better way to do things, we're always happy to hear those questions and observations. We just appreciate hearing from you. You can follow us on Facebook, Twitter, Instagram, YouTube, you name it. We're at chartingwealth.com, and we're all about learning how to read the stock charts. Take care.